Welcome back. Investors wasted little time in bidding up shares of Shopify in a big way early this morning. As soon as those investors saw the company's most recent financial results, the stock soared in the pre-market. Revenue in the third quarter rose by 26% from a year earlier, and Shopify says it expects that kind of sales growth again in the current quarter. Let's get the view of the analyst who covers the stock. We're joined now by Samana at Jefferies. Samad, thanks a lot for joining us. What's getting a lot of attention here is the revenue performance. How do these numbers look to you?
It was a bang-up quarter across the board. That's the only way to describe it. You had robust growth across the top line. You saw solid margin expansion, and you saw an outlook that reflects a business with a lot of momentum behind it and significant amount of discipline on the cost side. And it's resulting in what I think is the sixth, one of several quarters of very good top line growth paired with very good margin expansion.
The stock has climbed about 65% plus since early August. Explain that to us. Was the stock undervalued back in the summer?
Well, so I think there's been a significant shift in investor views. So let's break apart the pieces, right? First, you've had a dramatic shift in the view of equities in the U.S. generally, and you've had a pretty significant rally in software more broadly, right? I think part of that is other areas where you've seen money rotate out of, for instance, semiconductors into software. And so I think that's one thing that's been a benefit for Shopify. And then there's the company specific elements, right? The U.S. consumers held up better than expected. They've continued to add more subscribers than expected. Their profitability is better than expected. And so you've had a favorable market, you've had a post-election rally, and to boot on top of all of that, you've had very strong results from Shopify specifically, and all of that's resulted in a very robust performance in the stock.
How exposed is Shopify to the state of the U.S. consumer? It would be similar to any other retailer, or is the company perhaps more or less leveraged, as you might say, to the state of the consumer?
Well, at this stage, Shopify has become such a significant player in the e-commerce market that in many ways it represents the U.S. e-commerce market pretty significantly, right? However, what I would add on top of that is that if you think about the type of products that a lot of customers are buying from Shopify merchants, they tend to be more consumer discretionary, higher average order value. So a healthier economic backdrop, a backdrop where people are feeling confident in their employment and feeling more comfortable about their forward outlook makes them more likely to spend on discretionary spending and more premium types of retail goods. And I think Shopify is benefiting from that, but there's also a global element, right? So on the call this morning, they called out strength in Europe. And, if you think about the US, we've been doing quite well over here. I think there's been some pockets of softness in Europe. And to see that delivering this quarter as well just shows you the momentum in many areas of this business.
You've noted in your initial note after these results, you said Shopify continues to outpace the broader e-commerce industry. And you've just told us that, of course, it's a big player in the U.S. e-commerce sector. Talk to us more about that, outpacing the broader e-commerce market.
Yeah, so if you think about e-commerce as a whole, you're thinking closer to high single digits in the US. And if you think about Shopify, they just posted well north of 20% growth. And I think what that tells you is that they're benefiting from the end market itself, but they're gaining more and more market share. How are they doing that? They're democratizing e-commerce, right? They're not just getting merchants that were already transacting online. They're enabling new entrepreneurs, new people that want to participate in e-commerce and allowing them to get online more quickly and to sell across several different channels. They're also expanding the scope of where commerce occurs, right? So if you think about partnerships like they have with TikTok and TikTok and Roblox, which they've talked about, right? They're expanding the surface area of where commerce happens. And so they're able to outpace where just general e-commerce happens. And then lastly, they're also making significant inroads with larger enterprises, right? If you think about Shopify's DNA and how they historically talked about themselves, it was arming the rebels. And now you have a company that's making inroads with large logos and that they're firing across all three different parts of their business, whether it's offline, SMB, and large enterprise.
So you like these results very much. You like the way the company executes very much, but it looks like you think the stock has been fully valued. Before today's big rally, your price target was $80 per share. That's now $20 less than the prevailing share price after the big rally today. Will you revisit your rating and target price, or do you think the stock is now overpriced?
So I'll address where we were before the results, right? And if you think about where our target was, it was running toward that, right? And then you had what has been a post-election rally in U.S. equities, and that's been fast and furious, right? Faster than most people can keep up. If you think about risk-on assets and how well they've performed, I think that Shopify's participated in that, right? And this morning, you've had results that have added further fuel to that fire. What I would comment is we always adjust for new information, right? And if you think about today's results, they were better than what we were forecasting before the company reported. I think they were much better than what investors were expecting as well. And what we always do when a company reports is we sit back, we look at the information, and then we update our view based on that. And so what I'd say is I don't think that the stock is overvalued based on the results that you just saw.